And then we've got gold at the moment. Now, gold's been in a little bit of a state of affairs, hasn't it? It's kind of seen mixed market sentiment. Obviously, the Fed didn't really shake things up too much, but I think the uncertainty around December and the divide between the FOMC members will absolutely be guaranteeing to play a role in the gold charts now, because of Good afternoon, ladies and gentlemen. Hope you're all doing well today. Welcome to the Markets Now session. We are officially on the 3rd of November. I knew the clocks had been changed back to the normal time. Honestly, I was having this conversation this morning. I was having this damn conversation this morning just about it, for God's sake. Just once in my entire career would I like to get this right. Just once. I mean, it's just getting silly now. It's just getting silly. Oh, for God's sake. Well, look, to be fair, you guys actually turned up. So, I mean, you know, it's not the end of the world. Look, we'll crack on. We'll get the session done. It'll be an early US Open. Preset of analysis. We'll get the market report done, and we'll go from there. Oh man, I swear last week was the first week of the 1230s, though, wasn't it? Or was that the second week? Because there's always 2 weeks a year. What, it was the second? What, last week it had been 2 weeks I've been doing 1230 streams. Oh no, so it is only 1 week. I swear it's 2 weeks. Oh, it's 2 weeks on the return, isn't it? Yeah, it's 2 weeks on the return journey. It's only 1 week into the winter. Oh man, Scotty D, I'm gonna give you a job, mate, and your working hours are going to be 8. It's going to be 1 hour, 1 hour in the spring, in the autumn to winter, 1 hour in the in the spring. You just got to remind me. That's going to be your role, man. Oh dear, oh dear. Hey, good evening to you, Matthew. Good to see you. Good afternoon to you, Kai, as well. Good to see you, buddy. All right, there. Well, there we go, guys. You know, it's got to be done. It wouldn't be the UTC without it. I wouldn't be Mr. Max without it. It is what it is. So we will get through the market reports and we will crack on with some US Open analysis to get ourselves off with a good start. For the sake of the replay, for the sake of the replay though that will be uploaded to YouTube, I'm going to start the stream again officially without avoiding my mishap. So, good afternoon, ladies and gentlemen. Welcome one and all to this afternoon's market analysis and economic impact report session. Hope you guys are all doing well out there and enjoyed a nice weekend away, a couple of days to get away from the charts and unplug yourselves from the news as we conclude October and officially begin November. So we are closing ever further in on the end of the year. Now, the end of last month, it was a big month. At the end of it, I was extremely impressed by our performance overall, considering the fact that the market context that we had been involved with, the complete slowdown, the VIX volatility index basically flatlining. It was a really tough month to find trading volume, but we did manage to see it through. Good afternoon to you, Kelvin. Good to see you, buddy. So yeah, it really was an impressive month. We ended up closing out October at 22.24% net. Incredible, fantastic net return. And last week was actually mind-blowing at 5.15%. I only say mind-blowing. It's not like it was a it's not like it was a crazy week in and of itself, but it's just because we didn't have anything that happened. Nothing really happened in last week. So it was really good to see that on the recap and looking through the trading performance report, that we had some incredible days. I mean, Monday and Thursday, kind of, on the edge. I don't even think we saw a 0.5% on the Monday. We saw like 0.49, and Thursday was a 0.38 or something. But Tuesday, we got well into the 1%ers. We got 1.7, I think, 1.74%. Wednesday was 1.25. Friday was 1.35. I want to say something like that. So really, really nice, really consistent returns throughout the week, considering what we ended up trading through, which is great to see. Yeah, crazy gains. Yeah, absolutely, Scotty. Yeah, it was. It was on. I even down. Even down the road so long, I still fall trap of being so isolated on the day-to-day experience in the markets. So, just kind of plodding along day by day. At the end of a week, I'm generally quite surprised to see what we've managed to achieve, and at the end of the month, I'm even more so. But I still, I always try and keep my eye on the ball and the longer term goals, because that's what you have to do. But it's I think it's very common. We always, especially in this day and age, the humans of a species are always after that kind of instant satisfaction, that instant gratification, aren't they? And so you're always looking for those kind of instant returns. But it's kind of it's a bit of magic, really, when you see what happens at the end of a month, and and you look at those kind of net returns. So anyway, moving on. That was really good. October was great. Looking forward to November. Obviously, looking really ahead to December and the next FOMC rate cut to see what they bring to the table, especially after what we learned from last week's Fed event as well. If you haven't seen the Fed event video, then please feel free to go and check that out. That is up and available for everyone to see. So moving down into some of the major portfolio metrics then. So far this year, we are at an annual return of 140.97% with an average risk reward of 2.6%. The monthly breakdown is at 12.8. That did take a big dip down, but the only reason we saw that big dip down is because we're at the very beginning of November. That will, of course, and so we hope, continue to grind away up to maybe 13.5, which is where it usually sits at. And then the weekly breakdown is at 3.2, which frankly, it hasn't changed over the course of the last maybe 6, 7, 8, 9 weeks now. So that will probably be, unless there's anything that happens catastrophically, it will probably be where the year ends. So I don't, I wouldn't really expect too much more out of that one. So if we go down here into trading volume, October closes out with just a small amount of shorts above the longs. We got 36 shorts versus 32 longs. That was the number on that one. So just a little bit more short in the market than we were long, but it's pretty much there in terms of the sort of even split of longs and shorts. And finally, going down into portfolio ratios, we did what we did. The S&P actually lost 1.54%. UK FTSE had another gaining week. That was plus 1.62%, which was quite interesting. I mean, we were looking predominantly for the price action pullback for the UK FTSE last week. It never really took place. We got a couple of intraday ones, but I was looking for the big move back into liquidity, and it never really took place. So UK is really having a good time at the moment, predominantly due to financial companies, I would say, more than anything else right now. There's a lot of money in financials, and that's really propping up the UK FTSE price at the moment. Excuse me. So as we work our way down into market trends and opportunities, we've got a good selection for you guys this week. We've got US 30 Dow Jones, Euro NZD, UK Brent, and gold yet again. And we will be coming on to natural gas. We've managed to do something very, very special with natural gas so far, and it's rolling really nicely. I hope you guys have been paying attention, and you did your planning for it. We didn't need to do the planning for it. We already planned it, but have it ready and worked it out, because it's going extremely well. We will come onto that one in a moment. So long story short, US 30 Dow Jones, first of all, Fed-driven volatility ultimately has stabilized. We've now sort of seen a bit of a cap on the gains with the US 30 Dow Jones, not really seeing too much of anything at the moment. We're trading right bang in the middle of a trading margin, which I believe could go in either direction at this stage. So from the current market price, we could be looking for a dip down into liquidity and then the push away, or we could be looking for the big push above for a fresh break, close, and retest of the all-time high, which would then position ourselves ready and raring to go for the next leg of the move. It is looking pretty bullish at the moment, but I think following last week's Fed event, there's going to be a little bit of increased uncertainty around the markets, especially in the first half of this week. Now, of course, we're not even on the economics page yet, but don't forget this week, of course, is the NFP week. So we have the full spread of US employment data coming out at the end of the week, alongside the Canadian unemployment rate as well. So, of course, the markets are going to be really holding tight on holding firm until that data is released and they can get a better picture painted for them of, well, I mean, predominantly what Fed Chair Powell's been saying about the labor market. How does that then go into the Fed's projections? Because whatever these employment numbers are, well, I think we're looking at 50K jobs being added this week. And that's over 20, I want to say 25 or something, 20 to 25K previous jobs. But it's still a very small number. So it's still very much in tow with what Jerome Powell was saying in the last Fed event about the labor market slowing down and them looking at that and how that's going to then impact inflation with people in work and people spending and so on and so forth, and as they kick the can down the road, so to speak. So it's going to be, I think this week's NFP is definitely going to be a pretty big one, or so I always hope from that regard. But I think the Dow Jones is certainly going to be holding tight until that. We'll have to work out the small short-term sort of intraday volatility, as and when necessary throughout the US Opens over the course of the week. So moving on to the Euro NZD then, a bit of a similar situation, I suppose, to the Dow Jones. We've had a relatively established trading margin. We got the lows and the highs above. We're trading slap bang in the middle at the moment. What I would think is that the market needs to come back down to the low before going up to the high, and that would be the weekly trading opportunity from the low to the high up here. Looking back in the past, this is a really beautiful point of inflection. So is this one. And we've most recently come from the high. So the money, the next sort of, barrel of cash, if you like, is going to be down here. That's where the commercials are ready for their longs. So I would like to think that we could look at the breaker structure of this low. You see, the top of the cross there where I'm pointing, those lows in the market there. I'm thinking that to be utilized as a breaker structure point to get in for a long up to the high. And I mean, guys, we could be looking at a real significant risk reward on that one, a really nice return on investment. So it'll be interesting to see where that one shapes up as well as the week goes on. Coming down into UK Brent, we've got, again, some really nice margins available here. We've got the break close retest opportunity of the mean coming up to the highs. We've also got the opportunity for a break of structure short back down to the previous low, which is a really nice big point of inflection down here. And then, of course, look for the possible bounce back. There wasn't really any reason for me to put this because that won't be falling into line with this week's set of trading opportunities. But I wanted to put it there anyway to express my thoughts in the coming weeks as well. So, of course, these are 4-hour charts that I've taken the snapshots of. So, of course, a move from there to there is probably going to take the majority of the week unless we get some ridiculously sized move for some random reason. But that's what I'm looking at so far there. And then we've got gold at the moment. Now, gold's been in a little bit of a state of affairs, hasn't it? It's kind of seen mixed market sentiment. Obviously, the Fed didn't really shake things up too much, but I think the uncertainty around December and the divide between the FOMC members will absolutely be guaranteeing to play a role in the gold charts now. Because, of course, it's going to be playing a huge role in the dollar. And one cannot happen without the other. So we're going to have to wait and see. It's going to be just a case of sitting on our hands and being patient to see where this one goes next. I am not interested in trading the short between these two margins. This is more of, just an expectancy. If price gets the break close retest underneath here, for the bearish continuation, fantastic. I will definitely be interested in shorting it further outside of this margin. But I would like you all to think about this area in here as a no man's land, just a very wide one, an incredibly wide one, but just a no man's land nevertheless. So if we want to go long, it's a break, close, retest, continuation, and then we can look at a very extended long right up to the all-time highs. Or alternatively, we're looking at a deeper correction taking place, and we'll have to short it on the way down. So moving on then, next up we've got the market challenges this week. So in terms of what's hit the algorithm and registered as a volatile event, we've got the JOLTS job openings registering as a 2 out of 10. We have the BOE interest rate decision on a 4 out of 10. We then skip Thursday into the US employment data on the Friday, which is registering as an 8 out of 10 in terms of what we've got going on here. And then we've got the CAD unemployment rate. So the US employment data registering as an 8 out of 10 is not, don't get me wrong, an 8 out of 10 is, it's a big deal. It's extreme, but it's not as extreme as I was anticipating. And I can only assume that's because it's looking at a 50K jobs added projection, which isn't really too much of anything. And it's in line with what the market is expecting. So that's really why it's registering as an 8 and not a 9 or a 10 out of 10, to be fair. Now, going down here into the state structure volatility index. Commercial long versus short volume, we don't really have any notable callouts apart from gold. And gold at 64% is extremely bought. But again, I would reiterate and remind all of you that the liquidity in terms of the bought orders in all of these assets and the way this one works is that they register at not just at market orders, but pending and limit money as well. So even though it's 64% bought, that's going to be total orders. And so therefore that's not money that is live in trades in the market currently. So for example, just going back up here to the gold chart, for example, if let's say 30% of the 64% is long, but it's long down here, then that means that the market can still rally and still get the break, close, retest, and these orders will never be filled. That's how it works. So you just have to understand that. Make sure you understand that one clearly. But there's no other really notable call-outs. I guess the US 30 Dow Jones at 57% bought is quite a notable one. But again, it's kind of on the cusp of what I would deem to be significant right now, especially with what we're looking at in the market. So I just don't think a 57% bought metric is really worth putting the alarm bells on and thinking, wow, this one's going to explode. That's not what it's telling me. So possibly look at some bullish momentum in it for sure long term, but nothing that's going to affect us intraday. So third and final page of the report this week, we got the economic and order book impact report, of course. Now, in terms of the economic impact scale, we've got the JOLTS job openings registering as a 3 out of 10. We got the BOE interest registering a 6 out of 10. The US employment data, non-farm payrolls, average wage growth, employment rate, and so on is registering as a 9 out of 10 in terms of broad market impact scale. And then finally, we've got the CAD employment rate, which is actually registering as a 4 out of 10 in terms of broad market impact. So I'm certainly going to be putting some pressure on the USD CAD this Friday as I would say at least one of our primary FX positions. I don't want to say the only one because we could be looking at the Euro USD, of course, as well. But USD CAD this Friday is certainly going to be a bag of laughs. And that's what I would think about that one. So we'll be getting stuck into that on Friday afternoon as well, where we start to trade that one live. Moving down into the multi-asset impact gauge, unchanged from last week, of course, 50% in the Forex space, which makes perfect sense given the level of data that we've got coming out this week. Money flow trends, buy side versus sell side interest. We've got one notable call out, that's on the indices. Fixed income markets and the commodities markets are right in thresh at the moment. There's nothing notable about them. But 65% of total money bought in the indices. That's a pretty big number. That's kind of on the outside, I would say, of the the mean on that one. So yeah, standard deviation definitely showing above on that one. So an interesting one to probably keep in mind, I would say, as the week progresses. Moving down into equities and focus, we've got a whole mixed bag for you up here. So all relatively decent. Would probably avoid VSEL if I'm honest. The NEOG one, certainly have a look at that one, and the MXL one as well, certainly worth a view. And then we've got Everbridge this week. This is a new one for us. We haven't actually looked at Everbridge before as a potential buying opportunity, but this one is looking good. The only downside about this one at the moment is the fact that it is loss-making. It's a loss-making company right now, but it does definitely have the opportunity there to be an extremely big company over time, extremely profitable, successful company over time. So it might be a little bit more of a long-term buy and hold, this one, rather than the sort of 2-week buy intraday, intra-week level trading opportunities that I provide. But I think it's definitely worth a look. At the end of the day, guys, I wouldn't have put it there in the first place if it wasn't worth a look. So not sure if your standard equity accounts like Trading 212 or whatever has it. Please feel free to go and check it out, look at the details, and take a view. And then finally, we've got institutional buying interest by sector. Nothing really noticeable at the moment. We did have a couple swapped out, of course. Industry and healthcare have been swapped out, I believe, for... I actually can't remember what was in second place last week. I cannot remember off the top of my head what was there last week, but it has been swapped out. We had 2.1 billion capital inflow added to industrial sector. We had 2.9 billion again in technology. Technology is just, yeah, I mean, the amount of money going into tech, you can't even imagine. You cannot fathom it, to be honest. It's crazy. So that one's going to remain at number 1 point, I think, for a long time to come as well. It already has been, but probably will remain there. And healthcare. So this is actually, I couldn't fit in the title, but this is actually consumer healthcare, which has had $1 billion over the weekend added. So that's an interesting one. It's definitely not my neck of the woods. I don't know hardly anything about consumer healthcare. I mean, this is bloody anything. You know, this is like moisturizers, stuff like that. You know, I don't know if anyone in the room's a master of personal healthcare stuff like that. Certainly not me. I'd sooner throw myself down a mountain on a mountain bike than know anything about moisturizing my face. But if you do, there you go. Look at healthcare products. It's definitely going somewhere. All right, so now for the fun part. I know this is the part that you all look forward to more than ever when it comes to these market report breakdown sessions. The disclaimer. Now, the information provided in this market analysis report is for informational and educational purposes only and should not be considered as financial advice or a recommendation to trade or invest. Trading in the financial markets involves significant risk and may not be suitable for all investors. So please be careful out there. Read the full disclaimer. We've got loads more about that on the UTC T's and C's. Feel free to go and check that out as well. All right, ladies and gents, so that's going to be it there for the market report. I hope you've enjoyed the market report breakdown. As always, the report is readily available for you to download and walk away with your own copy entirely for free. This is free top-level market insights at your fingertips. All you need to do, if you haven't done so already, is sign up for a basic membership with the UTC, come into the trading room, say hello, and go down to the UTC My Report section and download your own copy. There's nothing standing in your way apart from, apparently, yourself. So, you're welcome. Come and join us and have a look. And now we will dig into the charts a little bit more and see what's going on this afternoon in the US Open. Good afternoon to you, Jack, by the way, and I can see we've got Asif in the room as well. Good to have you guys on board. So let's just swap over the screens here, change stream, and add the charts. There we go. Awesome. Right, let's have a look then. So first of all, ladies and gents, we got natural gas. And let me tell you something, this natural gas is absolutely insane right now. As of this morning, I mean, to be honest with you, it doesn't look quite as impressive as it did early on in the day. But this morning, we were trading up here, 8:30 a.m. at 371. Honestly, I felt like a right baller. It was fantastic. It would have been one of the year's most significant risk reward ratios had it not been ultimately for the plan of attack that we were having. But earlier on today, when I was looking at the chart in natural gas, we were trading here at a 1 to 7 risk reward ratio, which was absolutely fantastic. Currently, I've got my confirmed stop loss at 357. Which is represented by the red line. This is a managed trade. This is a hands-on approach, as I've very clearly stipulated when we were planning for natural gas in the first place and looking at our first pending order being put into the market there. So yes, it is a managed trade. It's a very hands-on approach. There may be the time in the next, I would say, even 20 minutes where I decide to move that stop loss and I might bring the stop loss back down here. I'm having the stop loss positioned behind each point of liquidity as we go up. So obviously the next point of liquidity is now here. And as the market breaches this one, the stop loss then, the idea of it is it will be moved up to a nice margin underneath there instead of where it was there. And we just carry on working up like that. We're always, remaining protected all the way up, and we're trying to soak in as much profit as we possibly can. Now, currently, we are on a 1 to 4.84 return, which is absolutely superb. Really happy with that one. But it's only the beginning of the journey, because if we look at the daily time frame, natural gas cycle has started, and that's looking great. But I am eventually looking for natural gas to be trading at 483. That's where I'm thinking it's going to top out, and that'll be around mid-January, maybe February, depending on how the cold seasons are. So we're literally trading weather cycles here, ladies and gents. That's what we're doing, and so far we're off to a really strong start. But we're certainly not out of we're certainly not out of the woods yet. We're only trading at a 1 to 4.8, and there's a lot of room to go. Now, this area where the red line is it's not a coincidence, but it is at a pretty significant level of liquidity. It's a pretty big one. We've got a lot of inflection going on, a lot of change of hands, a lot of commercial activity where the market's come up to it, it's taken a pause. We've had turning points as a result of it, and so on and so forth. And that's basically where our stop loss is trading right now. It's no surprise that the market is coming back down to retest this area. So I am not worried about moving this stop loss down to 348 at all. There is no concern about it whatsoever, because on the daily time frame, this zone is probably about that wide on a 15-minute chart. That's probably what it looks like. So I don't care about it coming anywhere in here if it retests and then continues on. And at the very least, if we exit the trade there, we've done a 1 to 3.45, which is an absolutely superb trading opportunity anyway. So that's really what I'm thinking at the moment. Thought process on natural gas, long-term continuation trade, very hands-on, and just try to manage the thing out. I mean, ultimately, I don't want to take any further losses than 348. So if the market comes down and we stop out there, that is it. I will be happy with that trade idea. It's a great risk reward, and we can look to get in on the second leg. I don't care about missing out on this last little chunk for the sake of staying in the trade and possibly 10xing the order, maybe 20xing it, maybe 30xing it over time. So there are those things to consider. And that's about it. So let's just take a little step up here and work our way into the US indices for this afternoon. So the US indices then, 15-minute time frame, get us off the ground. We haven't really seen too much of anything yet. It's still trading directly slap bang in the middle of the trading margin, which is a little bit annoying. I was hoping for possibly a little bit more out of it so far today. Some better trading margin availability. We've got the high up there. We have our low down. Let's say I'm going to have the low down here. My high's been removed. There we go. So yeah, that one goes from there. So that's not too bad. Intraday trading margin between these 2 points in time. I do not want to be taking any trade ideas below there, to be honest, because that runs into a ton of risk, technically wise. So I'm not really bothered about trading short outside of this area. Trading longs on the outside of the top, possibly, but that's a long way to go. So I think that looking at both of these at the moment, I think I would be much preferred trading between this space in time. We've still got the NAS 100 to work through, possibly adding in the S&P 500 if it's necessary. But ultimately in the Dow Jones, I'm going to be leaving the margin here for the day. So let's say, for example, we come back down into liquidity. We've got where the price line is at the moment, a really nice breaker structure point. Just going to double check that one, drag it left. Kind of nice, sometimes not. Sometimes it appears that the better area would be just above and then just above again. That's pretty deep into the trading margin now. I'd like to have something a little bit more aggressive, to be honest. So probably going to bring that back down to around there where I had it the first time. I want to get that stop loss relatively low. So the market comes down, we reach 47.52, we reject 47.52, and then we bid back. So then we start to look at the buy order. That's going to be at 47.59. Stop loss is going to be naturally at around there. That's probably 47.54, sorry. And the target profit at 47.75. That's going to yield a 1 to 3.5. Really, really nice, well-rounded trading opportunity there. Based on some pretty decent structure. It's pretty decent. It's not perfect, but it's pretty good. It's good enough for us today. Next up, for the short, let's get rid of that. For the short, I think it's got to be that one, doesn't it? It's really deep into the trading margin, but it's so clean and clear, that one. So I think we're going to have to. So if you are short today, you're going to have to wait for the long to take place. Hopefully you would have already pulled in the trade idea when it gets to 47.75, and then you can look to take the short down there. And that's going to be via the breaker structure at 47.67. Your stop loss on this one is not, of course, going to be up at the highs. You're going to have to run a 50% margin stop loss. That's going to yield a good risk reward ratio, but of course it does run the risk, a more significant risk, I suppose, of getting wicked out. You've left a good margin though between the entry and the stop loss, so potential wick throughs aren't going to trigger the stop, which is also good. And I think that's relatively good for what we've got to work with today from the Dow. That's a pretty well balanced chart. So we're going to download that one. In terms of the NAS 100 today, let's go up here for a moment. Just want to check the daily for a second. Yeah, it doesn't really tell us a great deal actually. This 15-minute time frame looks a bit choppy. We've got an ascending level. I think that would be helpful. So let's put that there. We've also got a descending level, which would equally be quite helpful. So we're going to put that in there as well. Actually, that was really helpful, guys. Look at that. Wow. Didn't realize that was going to be as helpful as it was, to be honest. So, whoops. So we've got a decent trading margin between the two now. Very, very decent trading margin. That descending level is absolutely stunning, to be fair. I cannot fault it at all. Really well established. So we're looking for a rejection of the descending level. We're looking for the breaker structure, which is going to be positioned there. We're looking for a target profit. I'm not going to be looking for the ascending level for the TP, guys. That's a little bit too over optimistic, I'm afraid, for the day. It is only Monday. So I'm going to look at clearing this margin. We've already seen this a couple of times now, and I would like to look at this one again. So we're going to have a short. That's going to be there. We're going to target down here at around 25.92. And the stop loss for this one's going to be a nice little margin behind there, and that's going to yield around a 1 to 2.62. So really, really decent. What you can do, if the market decides to absolutely dump today, and we come down to the ascending level, and then it starts to get a bid, you could, in theory, take a breaker structure trade on a 1-minute chart back up to do the retest. And that's not a bad trade idea either. You're probably looking realistically at around a 1 to 2.6 on that one. But you will have to have your wits about you. There's no, predetermined breaker structure point that we can just go back in time and find that's going to work for this trade. So you'll have to be having a very hands-on approach and watching and reviewing each candlestick. As soon as a structural point is formed in real time, you will then go on to execute the trade in real time with it. It won't, it's impossible to pre-plan it like we do 97% of our trades here. So you will have to consider that. But still, it's absolutely doable. The process is there. It's all ironed out. You basically do exactly what we're already doing. You just have to wait for it to be created first this time around. So that's going to be the Dow Jones. Excuse me. Now, for the S&P, really nice ceiling in here. Let's have a look at this. So, really nice ceiling. That's a really nice floor. The trading margin gets a little bit skewed along here. I was initially thinking that we could use that for the breaker structure, but we have had a couple of failures on this one. Failure 1, failure 2. It's the only failures we've had. We've had 2 failures. We've had good success on there as well, but it's not perfect. I don't think there's going to be any long breakout availability on the S&P today, but I do believe that we could probably look at a short, just adding in an extra opportunity for you. So if you maybe miss the NAS or something doesn't work out, then you can get in on the S&P as a late comer sort of opportunity. I would have that as a very modest 1 to 2.28. Have the full scope of the margin there for your stop loss. Have a little bit of a later entry. Have it more relaxed, more informal, and execute that one with a casual sense of mind. And yeah, let that one go rather than the NAS 100, which is going to be quite, I think, probably a little bit more chaotic in motion. So that's that. Yeah, I think it is looking pretty good. I think things are looking pretty good today. It's a Monday. You know, we all know what Mondays are like. They can be good, but often they aren't. There's some relatively decent trading margin. The markets do look like they're shaping up for our opportunities this afternoon, which is decent. We've got the initial long breakout opportunity on the Dow Jones if the markets want to go long today. We also have an equally nice short in the NAS 100 if the markets want to go short today. And these are really nicely following commercial areas of interest. So there is that to add to it as well. So I think things aren't really looking too bad at all. Now, I will get these trading opportunities out to you guys, obviously, within good time. They'll be with you within the next couple of minutes, really, after the stream ends. Are there any questions or anything, anyone? No questions. That's fine. Okay, well, listen. If there's any questions at all that you would like to ask or that you remember after the show's over, please just fire them out into the chat and I will get back to you ASAP. And aside from that, good luck with this afternoon's trading session, guys. You know, take it easy out there. It is only the first day of the week. We've got a long way of the week to go. So take it easy out there. Pace yourselves. And let's see what we can pull in. We've also got, for those of you on the other side on YouTube and out there in the public space, please feel free to come and join in the trading community. This isn't just a YouTube only channel. We do this on a daily basis inside the trading community, where you can come and find out these market insights firsthand. And of course, you've got a direct line to myself. So if you need anything or want to ask any questions, you are always more than welcome to do so. So guys, have a great day today. Look, take care of yourselves out there. Have a great trading week as well. And I look forward to catching you in the next one. So I'll see you then. Thanks, team. Bye-bye.